What if one simple, everyday decision, one that absolutely doesn't require a massive trust fund or a six-figure salary, was the literal difference between struggling financially forever and retiring wealthy? In today's explainer, we're breaking down a strategy that's so simple, it's basically hidden in plain sight. We like to call it the $100 wealth machine.
Seriously, what if a single daily habit completely decided your retirement? Just think about that for a second. We're not talking about winning the lottery here, and we're definitely not talking about timing the stock market perfectly. We're looking at a super accessible, totally unglamorous habit that costs less than a few coffees a week. But to really get why this is so ridiculously powerful, we first have to take a hard look at where most folks actually stand right now.
$1,000. According to recent surveys, the vast majority of Americans literally cannot access even a single $1,000 for an emergency. That means more than half the country is living so close to the edge that a minor car repair or a surprise medical bill could just completely derail their lives. And here's the real kicker. We aren't just talking about minimum wage workers. This stat includes folks with great jobs, college degrees, and what look like totally secure middle-class lifestyles.
Which brings us to our first major concept. Part 1. The hidden financial trap. The harsh truth is that most people are just hopelessly stuck in this endless earn and spend cycle. You know the look? Rich on the outside with the trendy clothes and gadgets, but completely broke underneath? When we hear the word wealth, the myth tells us it's all Wall Street traders making million-dollar deals or overnight tech billionaires. But the reality? Well, the reality is actually incredibly boring. It's built on consistency and time. It's not about hitting a jackpot at all. It's the highly effective, purely mathematical reality of letting small, consistent actions compound over decades.
Check out this critical number, 60%. If you can just find the discipline to save and invest $100 a month, you immediately bypass more than 60% of your peers. Think about that. Just by doing this one simple act, you put yourself in a substantially better financial position than the majority of the population. And that's not because $100 is some insurmountable fortune, but simply because most people never develop the basic discipline to consistently save anything at all.
Moving on to part 2, funding your wealth machine, or where to actually find this $100.
Now, the immediate objection we always hear is, okay, but where do I actually find this money? If you feel like you're already living paycheck to paycheck, digging up an extra $100 can feel completely impossible. But really, it generally comes down to a strategic choice between two proven paths: reducing your recurring expenses or increasing your income. You can play defense and cut some costs, or you can play offense and hustle a little more with some freelance work or a side gig. The point is, you don't need a drastic lifestyle overhaul. You just need to uncover that initial $100.
Enter what we like to call vampire subscriptions and fixed cost. This is where your money is quietly hiding. It's in those forgotten streaming platforms, the gym memberships you never use, and those overpriced cell phone or insurance plans. Service providers absolutely bank on your inertia. They know you probably won't spend 2 hours on a Saturday shopping around for a better rate. But doing a quick, simple audit of these recurring costs can easily free up $50 to $100 a month, and it won't change your daily quality of life one bit.
Let's dive into part 3, the math of compound growth. This is where the real magic happens.
Once you've audited your life and freed up that $100, it transforms into an active, aggressive, wealth-generating machine that literally earns money while you sleep. Let's walk through the short-term math first. Over a 10-year period, investing $100 a month means your $12,000 in personal contributions grows to approximately $18,000. Now that extra $6,000 is great, right? But this is exactly where most people get discouraged and quit. They look at that gain and think, well, that's not life-changing, completely missing the massive exponential power that is secretly building beneath the surface.
Because here is the explosive long-term math. Instead of just 10 years, let's look at a standard 40-year career. Your total personal contributions out of your own pocket over those 4 decades amount to $48,000. But because of compound growth, your total portfolio value explodes to over $350,000. That right there is the staggering gap that consistency creates over a long timeline.
And please, do not miss the most crucial takeaway here. Look at the breakdown of where that wealth actually came from. Over 85% of your final wealth comes from your money working for you through compound interest, not your physical labor. You only put in $48,000 of your own sweat and tears. The entire rest of that chunk is pure automated growth. This is the fundamental absolute difference between the wealthy and everyone else.
There's a reason Albert Einstein allegedly called compound interest the eighth wonder of the world.
Whether he actually coined the exact phrase or not, the core principle is universally validated by literally every successful investor in history. Earning interest on your interest, year after year after year, is the sheer force that separates the financially independent from those who are forced to work forever.
To really wrap our heads around the mechanics, we have to look at the snowball effect. Early on, a 10% return on a $5,000 portfolio is only $500. You might look at that and think, I could just work a few overtime shifts for that cash. But as your balance grows, the math flips completely. When your portfolio reaches $300,000, that exact same 10% return is suddenly generating $30,000 in a single year. Your investments aren't just cute side projects anymore. They are producing a massive secondary salary that could potentially replace your day job entirely.
Part 4. Mastering the investor mindset and overcoming the temptation to spend.
Because, let's be real, the math is incredibly easy to understand. The hardest part is actually maintaining the discipline to do it in a culture that is totally obsessed with instant gratification. Every single day, you're bombarded with ads pushing you to spend today rather than secure tomorrow. The folks who successfully build wealth, they treat this $100 like an essential, non-negotiable bill. They automate the whole thing. Setting up an automatic transfer on the exact day you get paid completely removes that daily temptation to spend, ensuring your snowball just keeps rolling month in and month out.
And once you do this for a while, something absolutely amazing happens. You reach a phase we call lifestyle optimization. As you watch your money grow month after month, it actually becomes addictive, but in the best way possible. When you get a raise at work or a decent tax refund, instead of instantly upgrading your car or inflating your lifestyle with a way bigger apartment, you channel that extra cash directly into your investments. You naturally start optimizing for your future wealth rather than your present consumption.
And that's because you start to realize the hidden power of capital. This growing portfolio isn't just some digital number floating in an app. It buys you the ultimate luxury, options. When you have growing investments, you can suddenly afford to take a calculated career risk, like leaving a toxic job for a smaller company with more upside. You can afford to start a small business, or finally secure a down payment for some real estate. Living paycheck to paycheck strips you of all those options. Capital hands them right back to you.
Look, if you take one thing away from this explainer, remember this. Your biggest asset isn't your paycheck, your house, or your car. It is your time. Waiting around for the perfect moment when you magically have thousands of extra dollars sitting around is a massive trap. Every single month you delay starting this process is a month of compound growth that is permanently lost and can literally never be recovered. Time is the one variable in this equation you can never, ever get back.
So, what is the true cost of waiting until tomorrow? Your financial independence hinges entirely on the decisions you make right now, today. You have the blueprint. You know the math. You know for a fact it doesn't take a fortune to build a fortune. The only thing left to do is to start the machine. Automate that $100 and completely change your future.